How does ESG create value for investors and for society?
On the back of the ESG drive, we can observe governments, regulators, and corporations are now increasing their focus on ESG priorities, both for the short term as well as for the mid term. For investors, the integration of ESG factors into investment analysis helps in two ways. Globally, governments are more focused on sustainability issues such as climate change and social mobility. In turn, policies are put in place that will encourage the growth of sectors. At the same time, ESG-related regulations are growing. From an investment perspective, this results in demand growth from sustainability trends for companies, with advantage products and services, while result in cost savings and cost avoidance from sustainability-related initiatives. ESG investing also contributes in minimizing risk, as ESG issues can be costly to investors, as amplified by recent industrial accidents in the oil and gas and mining sectors, and labor issues in governments and solar sectors.
Studies have found that companies' sustainability practices have a positive impact on their operating performance over the long run. As these companies invest, for example, in renewable energy, clean technology, and resource efficiency, they gain competitive advantage in terms of improved efficiency and greater innovation. This in turn contributes to the company's performance and improves and creates value to the shareholders of these companies over the long run.
It is something that goes hand in hand with what your investor want in the long term, and also what the company should be growing into. But I guess at the end, if you look at it, that's where UNPRI comes back again. If you look at the sustainability goals of UNPRI, they actually stated 17 goals, 17. Okay, and the goals are very varied in a way. So there is environment, whereby they talk about climate change, they talk about clean water, then they talk about pollution as well. I think pollution is something that is easily associated from all of us here. But what they talk about is also gender equality, poverty, zero hunger, and they talk about how you treat your staff, right? So we know about Malaysia, the focus on how the foreign workers are being treated. And so governance is mainly more towards accountability, the board composition, and fraud related.
For investors, sustainable funds outperform traditional peers and reduce investment risk during the outbreak of COVID-19 in 2020. A Morgan Stanley report found that in year 2020, US sustainable equity funds outperformed their traditional peers by a median total return of 4.3%, while US sustainable bond funds outperformed their traditional peer funds by a median total return of 0.9%. At a recent webinar by the CFA Society Malaysia and the World Bank Group Inclusive Growth and Sustainable Finance Hub in Malaysia, it was observed that ESG stocks have shown resilience in times of crisis and in the longer term.
Every cents or dollars that you put into investing into an ESG or SRI related fund or businesses, you are actually contributing to their efforts to make profit in a sustainable manner, right? Vis-a-vis the last time around, I think traditionally we just invested to trying to maximize shareholders' profit, but this time around it's a bit different. Yes, there's a balance between maximizing profit but doing it in a sustainable manner, right? That's the major difference.
When investors allocate their monies into a business with high ESG standards, they are contributing towards the business's efforts to generate profit in a more sustainable way. This, in turn, will encourage growth and innovation in the ESG strong sectors which will ultimately benefit society.